Hi, this is Kerry Artek with Wicked Stocks, bringing you an individual stock pick in Qualcomm Incorporated, symbol QCOM. I did record this video, by the way, on Monday, July 11th, 2022. Here are the basic fundamentals, courtesy of Yahoo Finance. Just FYI, before I jump into the charts, I wanted to remind you, this is a video that was created largely for the YouTube audience, although it's also going to our premium members. So it is we do a free video like this a week, but just so you know, if you're a YouTube follower, that wickedstocks.com does 2 more of these a week, 8 a month, 8 individual stock picks a month that are only found on wickedstocks.com through our premium membership, which is a paid membership. 8 stock picks a month is $25, and that includes the weekly DIA, Dow Jones Industrial, the weekly IWM, the Russell 2000, and the weekly Bitcoin report, and 2 individual stock picks a week beyond anything that's ever shown on YouTube. So that's that. Needed to throw that out there. If you're interested in these stock picks, 5 to 10 minute videos per, as this one will be, you should go to wickedstocks.com and become a premium member. $25 a month for the basic service like I just mentioned, and you can cancel at any time. Anyway, let's move on to the charts. This is a graph chart, weekly bar chart going back some 30 years in Qualcomm. I'm going to zoom in on this area here on the next chart and show you that there's been a rising channel bottom that we've been following for the last few weeks at 121.69 this week. This is a base of support that can contain quarterly selling pressures, quite possibly through the rest of the year. 121.69 channel bottom is rising 53 cents a week for the week of Monday, July 11th, and above which there's a strong case to be made that at some point over the next year, we can rally back to the channel top that is presently at 208.47, also rising 53 cents a week. That first arrow on the left was the post-COVID or the COVID rally coming off those March 2020 lows. That took 5 months. I don't expect this market to rally to the channel top over the next 5 months, but I think inside of a year is likely, so long as we're holding above this 121.69 long-term support. So, you know, if you're a big picture trader, you could invest. I'd call that a near-term investment in Qualcomm, where you're buying and holding for the next year in anticipation of a rally into the low 200 area. You could consider buying 200 calls, out of the money calls that don't expire for at least a full year or so. So you're preserving that delta and immune to theta, the time decay element. But let's take a look at the near term. There is a near-term descending channel top that represents near-term resistance. It comes in this week at 137.43, and it's dropping 159 a week. And so for those of you who trade Qualcomm actively, this is good information. And I'm talking trading near term, whether you're a 3 to 5 day swing trader, you're a 2 to 3 week options trader, position trader. You've got resistance at 137.43. We're pretty close to it right now. As you close in on that resistance, you could consider buying, say, 122, 123 out of the money puts that don't expire for at least several weeks. I'd say a full month out. It could take 2 to 3 weeks to fall back to 121.69. We could fill that wedge out into August trade for the next 2 to 3 to 5 weeks, perhaps. The likelier outcome is that we will settle above 137.43. This on account of the fact that the 121.69 channel bottom is more significant in that it spans 2 years of activity, that descending channel top at 137.43, several months only. And so longer term line studies are considered to be stronger, especially with the classic sort of textbook channel bottom at 121.69 as it is. So closing above 137.43 at the end of this week, for instance, that formation dropping 159 a week, you can follow the location of that resistance all the way into August trade. If we close above it, we get a quick 1 to 3 week pop to the upside, which is the 155.49 descending channel top, the extreme channel top, and that is more of a midterm resistance area. So, you know, if we close above 137.43 this week, expecting 155.49 over the next 2 to 3 weeks or sooner, and, you know, you could play that as well. you could, consider playing 155 calls right now that don't expire for at least several months. Because as I'm looking at this image, I can tell you that holding above 121.69 will keep 155.49, that channel top, in reach over the next 2 to 3 months. And as I just mentioned, closing above 137.43 should actually yield the 155.49 structure in as little as 2 to 3 weeks. Once we test 155.49, you could consider buying 122, 123 puts that don't expire for at least several months, because we could fill that wedge out into later Q3 for the next several months as we continue into September, October trade. We could top out at 155.49, fall back to the 121.69 channel bottom. Inversely, we could bottom out at 121.69 and then from there rally to the 155.49 channel top within several months. And inside that wide area is the intermediate pivot point, presently at 137.43. I'll tell you that if we were to close in the coming weeks above the 155.49 descending channel top, then yes, we've got probably a 3 to 5 month or less rally on our hands up to that 208.47 channel top I mentioned at the beginning of this video. So that kind of covers the upside. If you've got questions or you're scratching your head, you could re-watch what I just said, because anything I say at this point in time would be repetitious to the upside scenario. Let's talk downside scenario. That if we do close this week, for instance, or any week coming up below the 121.69 channel bottom, rising 53 cents a week. Once again, you can do the math on that all the way through the third quarter in terms of determining the meaningful support that this channel bottom is. And if we close below it, and we really do need to see that by a 1% margin on longer term line studies, the 1% margin is really required. So, for instance, this week, if we settled any day actually at 121.30, 121.10, for instance, that would be inside the 1% zone. And while it would be a sell signal, it would not be a highly reliable one. It is the 1% violation that, in terms of my experience, is sort of the kicker, and that sets the market then up for a meaningful sell signal. So what does that mean? It means that if we close any day this week, and certainly followed up by Friday on a Friday settlement of 120.47 or lower, which is a 1% violation of 121.69, then we have a meaningful sell signal whereby this stock can continue to fall some 20% or so. And you can see this formation here, 121.69. This is exactly what I was showing you a moment ago, but I need to show you the big picture in terms of what the target would be if we close below 121.69, that formation by a 1% margin. And it would be this former long-term channel top that performed nicely back in 19 and 20 in terms of containing buying pressures. Once we push through it, it set off the significant rally. It is at 100.30 this week, rising a nickel a week. And so if we close below 121.69, we're probably 2 to 3 months away. So this is a decent setup for playing the short side of the market. I don't recommend playing the short side into later Q3 as long as we're above 121.69. I just mentioned how this market is poised for a recovery into the mid 150s over the next several months above 121.69. But if we do close below 121.69 by a 1% margin, we have a 2 to 3 month sell signal. You could consider buying 100 out of the money, 100 strike out of the money puts that don't expire for at least 3 months. That would be a pretty good play to the downside. I like 100.30 as a level that can contain selling through next year. It is a significant support level if tested. It also lines up nicely with that significant 2000 high back in January of 2000, the dot-com bubble high, and that was at $100 on the money. And so there's a lot going on in the very low 100 area that if given the opportunity to buy long-term as an investor, you may well act on that. Once again, I don't anticipate seeing that at all unless we close below the 121.69 rising channel bottom. That pretty much summarizes it. Don't forget to go to wickedstocks.com and become a premium member. For $25 a month, you will see 8 of these a month that you never see on YouTube. You have a great day.